0.3% to be statistically significant. But if you look over the longer term, and you see where it was, for example, last May and June was 11.6, so we've declined significantly since then. So we're able to say that's a decline on that longer term. But in the short term, month to month, it's very hard to pinpoint or to have that large of a movement.
And construction, it really looks, I mean, it's down, what, 40% since its highs of a while ago, and it just doesn't look like it's coming back that much.
It's still declining more rapidly than any other industry, I believe. But I think, and obviously the housing market is still, it hasn't recovered. There's still weakness in the commercial segment. But what we saw in construction was a pretty large bubble, especially in 2006 and 2007. Typically, construction makes up about 5% of private sector employment. We're as much as 7.2% of private sector employment in 2006 and 2007. Right now, we're back down to about 5%. So I think we're seeing a correction in terms of construction's importance or proportion of the overall economy. But that's not to say we won't see continued declines, because I think there's more recessionary influences or factors that are going to bring it down before it goes back up again.
Do you know, with the continuing declines in construction, are construction workers being absorbed into other industries, or are they just in long-term unemployment?
I don't think we have that information, at least not immediately. I think we have more job seeker unemployed data for like 2008, but not more current than that. Not yet. But it does look like the commercial segment of the construction industry is still declining, hasn't eased. It's still year over year, it's still down 20–25%, whereas the residential has, the decline has eased. It's still declining, but year over year we've come back up a little bit.
I had another question. I just need to think about what it was. Oh yeah, it seems that you're saying, last month you said that things are performing kind of a normal, as you know, and that was one of the first months where you'd used that word, not you, but the word normal had been used. That's really kind of good news, because up until then it was uncharted territory, so now we're kind of on a where you can kind of more predict where things are going to be. That's right? Yeah,
I would agree with that. All industries except construction moved according to how we'd expect them to move based on seasonality, within 1,000 jobs of where we'd expect them to be. So that's fairly normal. So yes, that's an encouraging sign for February's report. Okay.
Turning to the claims activity for the month of February. In February, we saw a decrease of initial claims for unemployment insurance, a drop of about 15% from last year. And we also saw a drop of similar proportion in the number of weeks claimed. So fewer people are filing an initial claim for unemployment insurance, and about 15% fewer are claiming weeks of unemployment insurance benefits. Currently, we have 213,000 individuals claiming benefits, and that compares with the same week in 2009 at 145,000. So you can see that this year there are still a lot more people filing for benefits or claiming benefits than there were a year ago. Currently, the Unemployment Insurance Trust Fund and the federal extension programs are paying out about $65 million in benefits each week, which helps to go back into Oregon's economy and help to provide a bridge for those who are without work, and also helps prevent secondary unemployment, because these individuals can use the money that they receive from the benefits to buy gas, buy groceries, pay rent, which then helps to support those other businesses that depend on that income. Currently, the Unemployment Insurance Trust Fund stands at $907 million. Oregon's fund continues to remain solvent. We anticipate that it will remain solvent throughout this recessionary period. You have to understand that unemployment insurance taxes, payroll taxes, are collected on a quarterly basis, and the largest amount is collected in the first quarter because employers pay on a certain dollar amount of their payroll that they pay out, and that is the largest amount happens in the first quarter, but those taxes aren't collected until the end of the first quarter, and that's in April. So the fund will